And now it's time for development debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll see two Chinese experts debating if the Chinese government should bail out a defaulting real estate developer. The 21st Century Business Herald has reported that the Zhejiang provincial government has investigated a debt default by a local real estate developer. The report says Xingrun Real Estate had a total of 3.5 billion yuan, or $560 million in debt. $400 million of that came from the Chinese banks. The rest of the money was lent by individuals at usurious interest rates. However, the report says the company's total assets are only worth about $480 million. Financial Times reported that the city and provincial government and the Chinese central bank were all discussing how to pay off the company's debts. Then the Chinese central bank denied that it's participated in discussion about a bailout for the company. The central bank's denial hasn't stopped Chinese experts from debating if it's necessary to have the central bank pay off the debt. China's real estate market is closely linked to the country's economic development, so any potential default in the real estate industry might cause a systematic debt default in the country. Data from the National Bureau of Statistics shows that last year the government's fiscal revenues reached $2.7 trillion. Amazingly enough, over one-fifth of that was from land sales. Nomura Securities estimates that real estate and its related industries such as car manufacturing and home appliances will contribute to 16% of China's GDP development. Financial commentator Zhang Ping believes the Chinese central bank has to rescue the real estate developer from defaulting. Zhang points out that in the past few weeks, many residential communities in second-tier cities have already decreased their housing prices. If the Chinese central bank continues to tighten its credit policy, there will be more real estate developers announcing they will cut housing prices. Only by doing this can breaking their capital chain be avoided. Ping says housing price declines in small Chinese cities will likely expand to first-tier cities such as Beijing, Shanghai, Guangzhou, and Shenzhen. Zhang says if small real estate developers such as Xingrun go bankrupt, Chinese banks' bad loan ratios would see a rapid increase in a short period of time. If these banks stop lending money to them, it might not only cause a financial crisis, but it could also lead to an economic crisis. Zhang suggests the Chinese government should bail out companies to make sure the country's financial crisis is under control. However, another financial commentator, Tan Hao-jun, doesn't support Zhang's idea. Tan wrote on his blog that the real reason why the default happened was because these companies believed the Chinese government would never allow a default to happen. Tan says the reason why banks still want to lend money to real estate companies is they're aware of potential risk. On the other side, real estate developers also understand they can keep financing and ignoring their debt burdens because of government support. Both sides believe the local government cannot get enough money to repay the debt, so they could ask SOEs to help them out. Tan admits that without government interference, the default might affect social stability. But Tan still points out that if the government bails out the company, then it has to do the same thing for every company in the same situation. Tan says the government would not be able to do that even if it has an abundance of cash. Currently,